Welcome to my podcast where we discuss various topics related to Quebec and Canadian real estate. In each episode, I unpack a different topic to help you be more informed. In today's episode number 4, we're going to unpack step 3 of 8 in our process to successfully purchase your next home. So if you've been following this series, in previous episode, we talked about step 1, which was knowing your cost. Then we moved to step 2, which is defining your need. And today we're going to talk about the pre-approval. There's 3 main things we're going to touch in this episode. So what is a pre-approval? Why do you need one? And how to get one? Fairly simple. Let's get started with what is a pre-approval. So the overall outcome of this step is you're going to get an official document from your bank, which is going to be the pre-approval. It's usually a 1-pager document. And that document basically says that they're willing to lend you X amount under Y conditions. So that's basically the gist of what a pre-approval is. So let's talk about what you're going to typically find on that pre-approval document. So number 1, you're going to find the purchase amount that you're looking to buy. So whether it's 400,000, 500, 6,000, 1 million. Then it's going to list the down payment that you're going to be putting. So it's not necessarily the percentage, but the amount of the down payment. So 50,000, 100,000, 200,000. The estimated annual municipal and school taxes. So if you remember in step 1, when we talked about the bunch of recurring fee, that was one of them. And they're going to estimate that amount based on the purchase price. The next element that you'll find is the amortized period of the mortgage. So is it 20 years, 25 years, 30 years? Then obviously the interest rate that they're going to be lending you at. The term and the type. So is it 4-year, 5-year term on the interest rate? Is it variable? Is it fixed rate? And then you're going to find the total monthly payment that you're going to have, which include principal and interest payment. And the last element that you're going to find on the document is for how long is that pre-approval good. As I previously mentioned, usually it's good for a period of 4 months, 5 months, depending on the financial institution. Okay? Now, whatever is going to be on that document, meaning whatever the bank is willing to pre-approve you on, or lend you, does not equate to the amount that you can afford, right? So the reason we talked about step 1, which is knowing your cost, and then step 2, defining your need. When you go through these steps, you're going to determine what you can actually afford based on your budget and based on your objective, right? So whatever the bank is willing to lend you is not necessarily relevant. So it's very similar to when you get advertisement saying that you're eligible to increase your credit card limit by 15 or 20,000, right? It's not because you're eligible that you shouldn't necessarily do it, right? Which means that if your bank is ready to lend you $1 million, but your budget is just, I don't know, 700,000, then you have to go with what your budget is, right? So it's very important that you talk about these objectives with either the mortgage broker or mortgage specialist that you're going to be working out in that transaction, okay? So that was the what. Let's talk about the why, okay? So one of the reasons why you want to do that is you'll find out how much the bank is willing to lend you and if that aligns, like I said, with your objective. Secondly, it demonstrates that you're a serious buyer. So if you remember in the previous episode, we talked about the type of market that I'm currently in. So I'm located in Quebec, Canada, and we're currently in a seller's market, which means that there's way more buyers than there are sellers, which is what causes sometimes to have multiple bid on the same property. So if you're 5 people bidding on a property and 4 out of those 5 have a mortgage pre-approval and you don't, your offer is going to get tossed away, okay? It also shows a level of seriousness for the realtor that you may be working with. They'll know that you can actually afford what you're looking for. So that is the second reason why you need a pre-approval. Also, financing, as you may have know, is a critical step in your home purchasing process. And so you want to get on board whoever you're working with for the financing. You want to get them on board as early as possible in the process. So you don't want to onboard them when you actually have a property and you've already made an offer, right? Because there's a bunch of things that they're going to need in order to help you. And those things that they'll need might take time to get. Okay, so and we'll talk about that in the how process. And so the last reason why you want a pre-approval is, as I mentioned, so once you find the property that you want and you make an offer, and that offer is going to be conditional to financing if you're getting a mortgage, usually there's going to be a delay for you to get the financing. And in my region, to give you an example, it's usually about 10 to 15 days maximum, okay? So if you only start the process then, you may not have the time you need or the bank needs in order to gather all the right documents that you need in order to get your mortgage approval. So if you get the pre-approval, you're starting that step sooner rather than later. So it's going to reduce the stress of you running around getting a bunch of documents during the closing the condition step, okay? So we talked about the what, we talked about the why, let's talk about the how. So I've mentioned mortgage specialist, mortgage broker. What the hell is the difference? Okay. So a mortgage specialist typically works at a specific bank. So they're employed by the bank. So if your bank is RBC or CIBC, they have a mortgage specialist and these are the individual that typically you will work with in order to get your mortgage. Okay. So because they're employed at a specific bank, logically, they can only offer you the financial services or product that their employer actually offers. So a mortgage specialist at RBC cannot offer you a mortgage product that is offered by CIBC, for example. Okay. So something to consider. Also, if that mortgage specialist works at a bank that do not finance certain type of property, you're going to be very limited. They're not going to be able to offer you any product. Okay. On the other hand, a mortgage broker does not work for a financial institution. They'll typically be affiliated with a mortgage brokering house. That could be, so here in my area, we have Multiprêt, which is one of the biggest one in Quebec. There's Mortgage Architect. There's DNC Lending. There's a bunch of other ones. But they'll typically be affiliated with one of these brokering house. And they will be able to get you a loan from a various financial institution, okay, that actually work with mortgage broker. So depending on your situation, it may be more beneficial to work with a mortgage broker than with a mortgage specialist. But it really depends on your situation. I can't tell you which one is better. Usually, the more complex your transaction is, the better it might be to work with a mortgage broker than with a mortgage specialist, okay? What you will have to provide to either the mortgage specialist or the mortgage broker usually is going to be the same thing. So for the pre-approval, they're going to ask you the same document that they would have if you're actually getting a mortgage. So that's usually like a pay stub, a proof of employment. If you have business income, a proof of business income. They're also going to ask you a proof of the down payment. So here in Canada, when you're purchasing a home, whatever down payment you're going to be using, you have to show proof that the amount has been in the account for a period of 90 days prior to closing on the property. Okay. Now, depending on your type of transaction and your situation, there may be a bunch of other documents that they're going to ask you. And sometimes it's going to take a certain delay to get a hand on those documents. So again, this is why it's important to get a pre-approval, because all these steps would have been completed before you get into making an offer and having to close on those conditions. Okay. Also, what I recommend you do is getting several version of the pre-approval with different amount. So let's just say you're looking for a property between 500 to 550,000. So you won't necessarily know in advance the amount that you're going to be putting in your offer. So what I typically do is I'll ask the mortgage individual that I'm working with to give me a pre-approval at like 500,000, 510, 520, 530, 550. And that way, once I do make an offer, depending on the amount I make the offer on, I can use the right pre-approval version. Okay? So that's a little tip for you. And then the last piece I want to mention is whatever mortgage amount you decide to take should obviously, like I said, be aligned with your objective. And typically the bank is going to calculate a certain, to approve you, they're going to use a calculation of a certain percentage of your gross income, right? So it could be like 40%, 45%. It depends on the situation, depends on the financial institution. The person you're going to be working with, your finance is going to be able to give you more information. But the reason I want to bring this up is you have to make sure that whatever mortgage payment you end up with aligns with whatever threshold is suitable to you and suitable to your objective, right? So very important. That's why I said early in this video that whatever amount the bank is willing to lend you is not necessarily the amount that you should necessarily accept, okay? It should always be aligned to your objective so that long term you don't have any buyer's remorse, okay? So that was step 3 of 8, which was getting the pre-approval. In our next episode, we're going to talk about step 4, which is the property hunting, which is probably the step that you all been waiting for. Thank you again for watching. See you in the next episode.